Thinking of buying a home in 2025, or rather not buying? You might want to hear about this recent data from Redfin about how the top 50 metro real estate markets are performing. For the first time in 3 years, home prices are rising in every single major metro. I'll cover this, what it means for you and what it means for San Diego. San Diego and expensive housing are like chocolate and vanilla swirl frozen yogurt. They just go together. However, the rental market locally and nationally are showing some interesting trends and data. Would you believe me if I said that these trends are showing a rental market that is becoming more affordable? All this and more covered here in this week's San Diego Market Matters, and I'm Karl Kyler, your San Diego Realtor. Real quick, if you appreciate the information I provide in these videos almost every week, consider subscribing to the channel and liking this video. And if you're thinking of selling or buying here in San Diego, I have my contact info in the description below. Let's connect and see how I can help you with your next move. Now, let's get into this. Quick market check-in. The CPI Report, Consumer Price Index, came out almost 2 weeks ago with good news. The markets were expecting the worst, but it actually came in as expected with baseline CPI. And as for core CPI, which is CPI minus food and energy due to their volatility, that came in below expectations. Now, CPI is not what the feds use to track inflation, but CPI is pretty impacting on the markets. We saw that after the CPI posted positive, the markets rallied. The actual inflation rate that the Fed uses is sitting at 2.4%, and unemployment is down to 4.1%, particularly after the most recent jobs report, which you can hear more about in my last San Diego Market Matters if you missed it. So what does this all mean? Well, the Federal Reserve meets this upcoming week at the FOMC meeting, where they announce if they'll do a rate cut to the Fed funds rate. With inflation not where they want it, but still under control, and unemployment looking really good, the Feds have no reason to cut rates. The Fed Watch tool is dang near predicting a 100% chance that the Feds will hold where they are this upcoming week, as well as showing that it will be more likely the Feds will hold rates where they are even at the March meeting. All right, now let's dig into what Redfin had to say about the top 50 metros. According to a recent report by Redfin, December saw an across-the-board increase in home prices in all of the 50 most populous metro areas. That's a significant shift from the past few years where a handful of cities experienced growth, a handful were flat, and then a handful were negative, all for various reasons. This uniform rise could signal the next phase for the US housing market. And good thing I'm here to share it with you, right? In December of 2024, Cleveland led the charge with a staggering 15% increase in home prices compared to the year before, the largest jump among all the major metros. Close behind was Milwaukee and Philadelphia, with impressive rises themselves. This trend starkly contrasts with previous years where cities like these were more known for their affordability rather than their rapid price increases. Nationally, the median sales price surged to $427,670, marking a 6.3% increase from the previous year. This rise isn't a blip, but part of a broader recovery, bouncing back from the gut punch that the market took in 2022 and 2023 when high mortgage rates were initially beginning to get dumped on us. Interestingly, while all metros saw price increases, the rate of growth varied significantly. For example, Florida metros like Tampa and Miami saw more modest increases, likely due to the combination of overbuilding during the pandemic and ongoing insurance and climate concerns that have made buyers wary, and for good reason. Even here in San Diego, we saw a 4.8% increase in home prices, with the median sales price reaching $880,000. And if you want to see a deeper and more detailed report on how our market did, check out my last San Diego Market Matters, where I go over all the numbers of how San Diego did. Bottom line, it's clear that the national trends are echoing even here in our own backyard. So what does this all mean for you? Well, if you're considering buying a home, the market is showing signs that prices are likely on an upward trajectory as expected from all the economists in the housing market. For sellers, the market conditions are favorable, but for buyers, the landscape is becoming increasingly competitive. This nationwide rise in prices is telling us a few things. Number one, the demand for homes remains strong despite higher mortgage rates. Mortgage rates at 7% or higher is stopping some buyers from entering the market, but not enough to impact the market to retreat prices. Nationwide price growth is also telling us that continued growth is on the horizon. Since 2023, only more and more major metros have jumped on the bandwagon, showing positive growth in home pricing. If it was the case the market was slipping into the other direction, we would have seen the opposite. Over time, less and less markets would be showing positive growth and more would show negative. This is a strong sign that shows what is likely on our horizon, that homes are not going to get less expensive. If you are a homeowner or a seller, this is good news. If you're a buyer, maybe not so much. But if you're a renter, I do have some good news for you, kind of. Let's jump into the rental report from Realtor.com to see where the rental market is going as well. In the December 2024 rental report from Realtor.com, we see a fascinating trend that breaks the norm of the past few years. For the 17th consecutive month, rents across the United States have declined, marking a notable shift in the rental market's trajectory. This isn't a minor fluctuation. 17 months clearly reports it's a sustained trend that's shaping the affordability of housing nationwide in the rental sector. Nationally, the median asking rent in December fell to $1,695, dipping below $1,700 for the first time since April of 2022. Remember how crazy the real estate market was in 2022? This drop below $1,700 marks a year-over-year decrease of 1.1%. What's driving this trend, you might ask? Well, there's a combination of factors, and the primary one is an increase in new construction in build-to-rent developments, aka BTR, which are housing units specifically constructed for rental purposes and not for sale. The building of these units has begun to outpace demand in the rental market, contributing to the softening of the rental prices. This is evident from the nationwide absorption rate, which measures how quickly new rentals are filled. This rate has fallen to 55%, a figure reminiscent of a more balanced market condition that we saw last in 2019. While rents are declining, it's important to note that the decrease hasn't led to a dramatic drop from the peak levels of 2022. In fact, even with the recent declines, rents are still up 16% compared to December of 2019. Bottom line, prices got out of control up to mid-2022 and have been stabilizing since. Now, shifting our focus to San Diego. The local data presents a mixed bag in line with national trends, but with some unique local deviations. For instance, two-bedroom condos in San Diego now have a median rent of $2,900, showing a year-over-year decrease of $175. This suggests that even in higher demand markets like ours, the broader national cooling trend is being felt here as well. And going back to the topic of build to rent new construction, yeah, we're experiencing that here in San Diego as well, and on a pretty massive scale. At the end of 2024, San Diego welcomed 3,226 new construction rentals to the market. Most of these developments started 3 years ago when mortgage rates were a lot lower, but now with elevated mortgage rates, more residents of San Diego are exploring the more affordable options in our rental market. Now, with regards to the detached side of the rental market, these are your single family homes, and there's a bit of a different story. 3-bedroom single family homes have now seen a slight increase in median rent to $4,350, up by $50 from last year. Even though this median price has increased, keep in mind that it's a pretty minimal increase, about 1%, and I would pretty much call that flat. I think it's safe to say that we are also seeing a stabilizing in pricing in the detached market as well, though it is showing up a little differently. And here's why. The contrast in inventory between attached and detached homes is significant, with 3,754 attached units available compared to only 1,202 detached homes. This significant disparity in supply is a key factor influencing rental dynamics here in San Diego. The abundance of attached housing options is likely driving prices down, whereas the lesser availability of detached homes maintains some upward pressure on rents. In summary, the rental market is experiencing notable shifts, both nationally and locally. Understanding these trends helps if you're renting out your property or if you're looking for a new place to call home as a rental. The current landscape suggests that while the market is stabilizing, the effects of past fluctuations up to the mid-2022s are still very much in play. Don't expect this abundance of units in the rental market to sustain. Rent Cafe is already reporting that they are seeing a slowdown in new build-to-rent units over the next 5 years in comparison to the last 5. So home prices are up and the rental market is stabilizing. What do you think makes the most sense to do next? Should you buy or take advantage of the lower cost rental market, which, by the way, more people are doing? But this does beg the question if you'll regret not having bought sooner 10 years from now? Let's hear your thoughts in the comments below. It'd be great to hear what you are thinking about the market. And that's a wrap for this week's San Diego Market Matters video. If you found this information valuable, be sure to hit the like button and subscribe to my channel. And if you're considering on buying or selling a home here in San Diego, don't forget my contact info is in the description below. Also, be sure to check out my other content that I post. This video that I'll have pop up right here is one I'm particularly excited about. It's how you can accelerate the growth of your down payment for your next home. Check it out and let me know your thoughts. As always, I'm Karl Kyler, your San Diego Realtor. I'll see you next video.